Hello everyone, this is Red with RedDragonLeo.com. Today is Monday, the 24th of January, 2011. Looks like we got fooled here again as the bulls decided to take it up instead of selling it off, which just goes to show you that only bullish patterns seem to work. Bearish patterns don't seem to work. Clearly, here on the 15-minute chart, this down move and sideways consolidation was clearly a bear flag pointing into the day, selling off, and it just, this is all it did. Basically nothing. It did the bear flag at the end. I thought maybe that was the start of something, and then when we opened this morning, it kind of chopped around there before we rallied. I thought maybe we're getting ready to go down and fulfill this bear flag. And that being a wave, if this was a wave 1, then this would start a wave 2, and then inside this here big wave 3, you'd have wave 1, 2, and a 3. And this is another reason I don't pay much attention to Elliott wave, because Elliott wave is so after the fact. You can't really predict it ahead of time. There's too many different counts. We were looking for a move down into a wave 3 inside of this being a wave 3. So you'd had a 1, 2, 3, 4, 5, and then the whole move would have been a wave 3. That's what I was looking for, and that's what I guess a lot of people were looking for on Monday. Didn't happen. Instead, they pretty much moved the market back up and manipulated it back up. Quite obvious. It should have sold off, but you're playing a game of cards that's the deck's stacked against you. So now we got this rising trend line right here, as you can see. It's a pretty important trend line. We now have a very bullish pattern. They have literally taken it and turned it into something bullish. As you can see here, this here is a cup, and this would be the handle. This here smaller is another cup and handle. So you have a small cup and handle inside a larger cup and handle, and this could very well play out tomorrow morning, pop us on up here, and there's a possibility we'll go up here to a double top or pierce it and going up to 1300. Remember, if we hit 1300, gang, we're going to go past it. They don't stop right there at 1300. It's too easy. It's too obvious. If they hit 1300, they will pierce through it to try to take out some overhead stops. I think that these patterns here, the way they play out, like here on this cup and handle, it would be this distance. So that's what, about 1283 to 1291, about nine more points higher, which is 1300. But you also got to count this one here, the larger one, but it's not as clean a cup and handle pattern, because really you would look for this being down and up, and then more of a sideways consolidation there for the handle, not this dip. So I think on a technical basis, the larger cup and handle that I'm saying failed. So we really only have just the smaller one, with this being the cup, this small section here being the handle, versus this being a large cup, and then this being a handle, because again it dropped. So I think it failed. If one of these moves fail, obviously it's very bearish, and it should take us down in a wave 3 in Elliott wave terms, because again you'd have wave 1, and now you've got an A, a B, and a C. And does it end here? Probably not likely. I'm going to have to say that odds favor the bulls right now of making this wave C go further up, which would also fulfill this smaller cup and handle. So you go up here, hit your 1300 plus mark, and if you're going to do that, or at least a double top, you could do that. That would fulfill it. It doesn't have to go that same distance. It just has to pop up. I don't think there's any rule that says it for the cup and handle that it has to go, that distance. That's just typical, that this one side would be the move up on it. but again, it could just pop up. And you can also look at this up and sideways consolidation is a bear flag. Now it's not playing out too good here on the 15 because it failed and sold off there into the close and then popped back up, or sold off right before the close and popped back up. But if you looked on this on a like 60-minute chart, you look at it here on a 60-minute chart and you can see it is bullish on a 60-minute chart. So it's an up move, sideways consolidation. So it's a bull flag there, which would pop us right back into the channel and take us up there to the 1300 again. So here on the 60, you know, we were expecting this to roll over. It was looking awful weak right there. Looked like it wanted to roll over, and they manipulated higher, put another higher histogram tower like this. And you know, this is actually from here to here is actually a positive divergence. So that very well could take us higher. You know, the market's going up, and it's a positive. It's positive divergence, not a negative divergence. So, you know, if it's a negative divergence, then obviously that would indicate that we'd have like one more push up. But as it's moving up, there's nothing to say it can't continue. We want to see it put in a negative divergence, a lower tower, and then one more push up, if that kind of makes sense to what I'm trying to say here. So, and I do think that's what they'll do. I mean, obviously, I don't think we're going to go up much higher and put in another big, massive tower like this. I actually think we're going to start to slope down and put in a negative divergence. But with the negative divergence, as you go down, the market should go up because they go in opposite directions, and it should be the last up. This also, of course, ties in with the Dow being just a hair away from hitting 12,000. I think close 20 points shy of it. So, you know, they're going to tag at 12,000 because they're never going to see it again. I won't say never, but I'm going to say several years from now. It'll be a long time. They're going to have hyperinflation to hit the 12,000 again after it finally hits it, wherever it stops, whether it's a few hundred points above it or 5 points above it. I don't know. I mean, you know, obviously if the S&P goes up here and hits 1,300 plus, then, you know, you could go, I don't know, 12,100 or something on that. But they're going to tag it because once it does finally roll over, you know, we're going down to see the 8,300 print, and then we're going to keep on going down. So it's just gonna be ugly once this P2 primary wave 2 finally ends and the market finally goes down. There'll be no up for a long time, and we have to crash the market first, and then after that they'll have hyperinflation, and that will make your gold price go up to 3,500, as they've got the fake print for that. But first it must go down to 935 range for that first fake print. So, you know, we can't be more than a few days, a week at most, from topping. I mean, they're going to chop around here and try to just wear us out. That's what they do, you know. So as you can see on the 30-minute chart, it clearly wants to roll over. It wanted to roll over here, but they pushed it on up. So as you see, when we were here, we were actually pointing down. We were about right here. We were pointing down. Well, they held it up, traded the market sideways, went down here, reset it, and pumped it back up. So now it's up a little bit higher. But from here to here to here is a negative divergence. What's that mean? That means you still could have one more push higher while the market rolls down. I know that's strange, but that's just the way the way this technical analysis stuff reads, at least to my understanding, so you know, it's a possibility that tomorrow, if this move does play out, it should pop up early in the morning. If for some reason it does not and it falls down, then you know, we should have a wave 3 down. Wave 3 down ought to take us down here and take out this 1271 low. You know, technically we did not get back up in this trend line, and so you've got a line here of resistance, you've got a line here of resistance, and you're below it. So you know, the question is, what are they going to do? I mean, obviously they control the market, so are they going to pop it up to 12,000? I think they are. I think they're going to go against what the charts say. I mean, because they've been doing it successfully ever since March of 2009. They've been going against what the charts say. Every time the charts come to a point to where they clearly 100% look bearish, they manipulate them and wear it out sideways until it finally resets bullish again. It's just a common thing that they do. You know, it's all designed again to steal your money. So again, you draw a line here. If that line breaks, we're dropping hard. And you got a line right here, a top right here. So what's the likelihood that it's going to pop up above it? I think pretty likely. You know, the 15-minute chart is pointing up. You know, so then you get the cup and handle pattern. It's a bullish pattern, and patterns seem to play out very well for the bulls, but not too well for the bears. So unfortunately, I do think they're going to pop it higher. 5-minute chart really isn't telling us much. It's going up, but so I don't think it's going to last more than a day or two. I think by Wednesday, wherever this pops up to and hits, whether it's just simply a double top, just like I said in the other video there in the weekend video, that we could possibly go up here and fall short of it a little, or hit a double top, or pierce it a little. I really don't know. But the measured move, I believe, is, well, Cobra's got it right here. Cobra caught this as well and circled the on his quick after the bell summary. Someone will borrow his chart. He's got a measured move of 130.09. So, and it's basically what I said there. See the bottom here on this line, this distance is the same going up. So basically from here to here, it should be the same from here up. And I think I measured at about 9 points on the SPX. So about 9 points up. That takes you right at 1300. So, and he's got that's right there, 130.09. So that's the measured move that we're looking for. And so bears, you know, I don't tell you, hang in there. Maybe we'll get a surprise gap down. You never know. They do like to fool everyone, even though, you know, the bulls are looking at this just like I'm looking at it right now, just trying to be open and just look at the pattern and not have a bearish slant to my video or my charting. You know, just clearly the pattern says bullish. Pattern says bullish. It says pop up 9 points, which is the distance from here to here, and that's about 1300 roughly, somewhere around that area. So that is that's all I got, gang. You know, again, if it fails, we're going down to wave 3. So you look at it from the Elliott wave term. There was a wave 1, here's a wave 2, and a wave 3 down. Of course, if we're wrong on this and it does pop up and go higher, well, then I guess this wave 5 up wasn't a completion of wave 5 up, and Elliott wave guys will have to figure that out. And I don't have a clue as to how to figure that out. I don't know. What would it be? If that wave 4 was still a wave 4 down, then I guess they would call this some type of A, B, C move inside of a wave 5, or I don't know. Maybe some count out 5 waves, I guess, inside this wave 5. Beats the heck out of me. Again, that's not my specialty. I don't think I really have a specialty. But so that's it, gang. That's all I got. Good luck tomorrow.